Okay, so you can tell we've had a lot of time to prepare, so we'll just see what we can do in the time we've got. But we identified we tried to map the market slightly for natural capital. I think we discussed this a bit on the panel yesterday, but the return from natural capital, carbon sequestration, biodiversity credits, flood protection, the list goes on of these services that are being provided that aren't valued at the moment. There's no liquidity in those markets. There's no price discovery. Quite challenging to invest in, to put a number on those returns. There are some provisioning services that we do get from land, so food, big topic, timber supply, other such provisioning services that are already being valued by society. People are already paying for them, but they're being provided unsustainably. So what we've come up with is a kind of concept called FAN, Foresight Alliance for Nature. It started off being called a bank. We decided we didn't want to be called a bank. We want to be a multi-purpose to address all the sources of capital that can attack the nature market. So philanthropy, venture, equity, mezzanine, senior debt, grant funding. This body of people at FAN are going to be experts in understanding what capital needs. They're also going to be experts in farming, forestry, standard provisioning services, but they're also going to be getting up the curve very quickly on carbon credits, biodiversity credits, to marry up the risks, opportunities, and returns that are in natural capital. So our idea was to try and mobilize for Fund 1 across the piece, 10 billion, looking about blending the finances to marry up the risks and rewards and returns that are available. So we split that into two products. One was broadly a debt product, which attacks all of the grant funding I think will be taken, anything we can get. And by the way, we'll be lobbying regulators to create liquidity in carbon credit markets and other nature-based credit markets. That's a given. This organization will be doing a lot of pushing for compliance markets to create these credit returns. But we think this debt part of FAN will be lending into decarbonizing farming, nutrient neutrality, reducing fertilizers, going for regenerative agriculture, funding the transition to more sustainable forestry, kind of more standard practice, lower risk, lower return. So there's going to be a debt part of the bank, or sorry, not the bank, the vault was the term we came up with. So the debt part of the vault will really lend into some of the more standardized things that, transitioning farming, etc. The more equity arm of the bank, the vault, will be attacking some of the more frontier markets, helping to fund monitoring, reporting, and verification, integrity standards for these credit markets. So really, we've got two kind of main risk pots. I'm just going to hand over to Quinton, who's going to talk about the kind of debt and lending aspect. Broadly, we will try and blend the finance to marry up with the risk profile and the return profile of the project. So it won't necessarily be the debt and equity teams within this organization that want to work together. But in terms of our two strategies, we wanted to just drill into the debt side. So Quinton, over to you.
Right. Is this mic working? Yes, great. Okay, so the question is, how do you scale up capital from financial markets? So by having this not a bank, this lending organization or financing organization, you're raising enough capital that it's got scale. That means it can go to financial markets and it can raise capital at low cost. The key thing then is that it can pass on those low costs for financing for nature solutions that meet certain criteria. So if you like, when a particular project that meets the criteria needs to raise money, it doesn't have to raise money based on its size, which might be quite small, but it can raise money based on what FAN will provide it, which will be a lower rate because of FAN's financial muscle. FAN then itself, so FAN can be backed by all these organizations, NGOs, governments, you hear about nature banks or sovereign wealth funds, intergovernmental organizations, philanthropic capital. It can be banked by all of those started out. It can then issue investable bonds and blended forms of capital that different kinds of investors can use. Now, bonds we quite like because you already get charitable bonds, so charities do issue some bonds. Some responsible investors even invest in them. So basically, bonds then give you something that's particularly attractive for pension funds because it meets their profile of needs. We also need liquidity for this. So what FAN is doing is providing a degree of liquidity and investable capital by having all these forms of issuance of investable products that it will produce. But it might also want to consider mixing some of its more exotic bonds don't have to be vanilla, together with some of its bonds and its mezzanine debt, etc., inside closed-ended structures, investment trusts, which can then trade in a highly liquid manner without the need for those actual instruments to be redeemed early. So I think that probably outlines. So you've got this idea that this large organization funded has the financial muscle to go to international financial markets, raise capital at low rates. It can then pass on those low rates to the nature projects that meet its criteria and issue bonds that genuine underlying investors, retail, sustainable, responsible, ethical funds can have in their portfolios, pension funds can have in their portfolios, and by issuing those, it raises more capital, and so the process can repeat and grow. I'll hand back to...
Thanks, Quentin. So just sort of trying to wrap up, forgot to mention, but Fund 1, 10 billion, that would be trying to start, proof concept. And I think it would be UK headquarters, but global mandate. Maybe using Europe and the UK as a test bed for some of the more challenging remote monitoring and sensing and proving some of the business cases in a lower risk environment, but very much with an ambition to go where the high impact is, so looking at the global south. So it would be a global mandate, but we'd be targeting, if Fund 1 was successful, we'd be targeting to scale that up to 50 billion, and after that 100 billion, big scale impact, but proving concept. That's an ambitious fund size. We wanted to go somewhere sensible, but Fund 2 could be multiples of Fund 1. And just finally, just to build on Quintin's debt approach and having the cost of capital and that cost of lending linked to nature-based outcomes. So your margin that you get charged on this capital would be linked to a lower margin if you're delivering good nature outcomes, good outcomes for communities, as Quentin explained. On the equity side, one of the challenges we discussed was the credit markets are not liquid. So a big part of this would be supporting, the venture side would be supporting some of the technical aspects and trying to establish those monitoring techniques. But actually at the end of it, when you have a credit, a nature-based credit, the markets aren't there at the moment. So there'd be a big lobbying angle around making polluter pays, having compliance markets to create pricing liquidity for the credits. But actually to attack that and get ahead of that and not wait for governments, we talked about corporate carbon purchase agreements. Make this bank, FAN, would forge the partnerships with the corporates who are a big part of this market to buy strips of carbon credits, biodiversity credits, flood protection credits. So that would be a massive part of creating the contracted cash flows, something to lend against, something to put your equity return against. So that was another big piece for us, was not waiting for regulators, lobbying them all the time, trying to encourage that compliance market, but actually solving some of those problems and trying to create basically contracted cash flows for these projects. So that's, I think, everything from us. Happy to take questions. Thank you.
I've got a question. I've got a question. How are you going to measure the global impact of this?
So I guess it depends on what the outcomes are of the funding, but we would have an S&ESG framework, similar to how Foresight has measured impact for many of our clients, and other people in the room have those systems. So I think we would be leveraging the existing sustainability and ESG frameworks and building into that nature outcomes. So not trying to reinvent the real wheel. So TNFD is a build on TCFD. So I think, in a simple terms, trying to just build on the existing mechanisms that people know and understand already, but splicing in specific ways of monitoring around nature. But it will involve tech, and we did talk a lot about integrity of carbon credits, permanence of carbon credits, and there will be a need for regulation and guidelines from governments. The ISSB, the accounting standards coming down, TNFD coming down will be helpful. Governments will have guidelines, but ultimately, this fan would not talk about having carbon credits that aren't verified. So there would be an independent verifier involved in, you planted a tree at year 20, has it sequestered? So there would be a verification backbone of independent people checking that these credits are delivering the outcomes that people are paying for.
If I may, from the kind of financing perspective, you can obviously then say the amount of capital raised and delivered to these kind of projects as it grows, and also the differential interest rate, the amount of interest payments these nature-based products or solutions or proposals haven't had to pay because you've been able to give them loans at lower rates than they would have had to have paid otherwise. And for individual projects, enlarging on what Robert was saying, you can obviously link them to SDGs and impact metrics. There are frameworks already out there on that. So you've got these two sides to it. One is the measuring the nature solutions. The other is the financial aspect of saying, actually, it's mobilised this much capital, and these projects have collectively had to pay this much less interest through this structure.
I love it. I love the ambition around it. I'm interested in just elaborating a bit more around the benefit to the communities where the biodiversity is most. I think we talked yesterday about the Global South has a significant, kind of a great wealth in terms of our biodiversity impact, but struggle to unlock capital in order to get value out of that process. So in terms of the people that might participate in FAN, how does the community get themselves involved in that process?
Yeah, I think as part of the sustainability and ESG framework, there would have to be, and there would be, a large focus around, that broad definition of society and community benefits. At project level, depending on where you are in the world, I think tying people in with, benefit sharing agreements, having something, if they're putting into a project, they're getting something out. And so I think at project level, we would be trying to make sure that there was a flow of services coming into where those projects are happening, and then putting that into the monitoring system that flows right up. Ultimately, I think the debt will be interested in these outcomes, but ultimately the equity who FAN would be representing on the boards of these projects would be looking at those as well. So I think we'd have a sort of debt monitoring system and an equity monitoring system to show the outcomes that people need, but having community at the heart of projects where that's possible and sensible, and making sure that that is one of the services is education for communities, access to the outdoors. If it's actually becoming a job creator or part of their livelihood in the Global South, that would very much be part of the services and monitored properly as an outcome.
If I might, Robert's alluded to the expertise that you've got within FAN. And of course, what this means is that FAN can have the expertise to be flexible, to understand the specific needs, because projects aren't all one size fits all. And basically, if people are coming along and explaining something that we can't necessarily imagine, nor should we to a degree, because that's presupposing we know all the answers, when obviously we don't. But by having that deep expertise there, when people come along with projects, you can then start to evaluate the benefits of those projects across those multiple dimensions. You can tie those into ESG, so you've got your social aspects, you've got your security, you can tie them into the UN SDGs, but you can then actually ultimately make a judgment and say, no, this doesn't have to fit a narrow model. It's basically FAN that decides whether it merits this, this lower capital rate that it has to pay.
And I think there are already quite a lot of existing government-led and global, the World Bank are doing things. And I think the FAN methodology would look at it more from societal side, project side, bringing that expertise to the table, understanding that aspect of things. So trying to bring the pipeline of projects, understanding what capital happens, and then pulling in some of those banks. But it would be coming at, if you're looking at your system, we'd be looking at it from the nature aspect, the societal aspect, the project aspect. That would be really the kind of wheelhouse of these professionals working here, with the skills to then marry that and then pull in those banks. But it's kind of looking at it from client-facing side, if I may say. That's kind of what we're looking at, servicing nature, society, and bringing those projects up. That project pipeline would be really important to then crowd in the funding behind this blended finance model.
Okay, so that does link to the questions I was going to ask you, because in my experience, asset owners are not very comfortable combining those types of capital. They like them to be in separate boxes and buckets. And there are lots of other players out there doing part of this story. So I was going to ask you what structure you would use to enable those different types of capital to be put together. But in your last answer, you're suggesting that maybe you'll be focused more on bringing the projects to the capital. But anyway, please explain to me what structure you would use if it's not a bank and it's not an individual fund. What's the structure that allows those different types of capital to be brought to the projects that you're going to crowd in?
Rob, sorry, before you answer that, I'm going to ask the judges after this one to bring up your scores.
Okay.
If you have one more burning question, probably got time for that, but otherwise scoring after that.
Well, when you answer, also, I'd be very interested in governance too, because that's going to be a challenge.
Yeah, I mean, in terms of projects coming forward, I think we would be looking for investable opportunities and trying to make structures. So I think within the FAN, underneath that FAN umbrella, we'd be looking for scalable, investable models and trying to bring, if it's an all-equity product that meets the projects that we're finding to deploy, it would be all equity and we'd have governance accordingly. If it was something that needed or suited blended finance, we would tailor-make the suit and then but I think there would be...
But is FAN an institution that is owned by the sources of capital or by...
No,
who is FAN? What is it?
It's an investment manager and fund specialist. So it's a team of specialists. It's not particularly a locked box of 10 billion per se. But I think, the key point is that this team would be targeting 10 billion, seeking pipeline in the debt and equity spectrum, and then trying to marry the capital up with that. But there would be closed-ended fund structures. I think in the first there'd be a big focus on development to maximise the impact.
Okay.
Great, so now we put the score.
Another perspective is to say that it's basically an organisation that is securitising these amalgamated debt debts and loans, so it can actually carve them.
It's an investment company with a mission that can create funds that can pool capital and direct it to the various purposes of the company.
Yes.
Yeah. Okay.
Cool. So we are now, and we're out of 15. Can you use a minus number? Is that allowed? No. Brilliant. I loved it.
Should we give a short explanation why? Our scoring? Do we have time for that? Short explanation why?
You could do it in the style of Strictly. You could maybe do a sort of one sentence kind of. Yes.
Why you put 13?
So I think that a structure like that can work. It requires massive collaboration with lots of other players, and you will need your first investor, your cornerstone will be absolutely critical, and probably will have to be public to start with, in my view, unless you can get very big philanthropy to be your first stake. You know, if you can get Bezos to say, I'll do the first 1 billion, something like that. I mean, obviously, you know there are other players out there who could do this, but what would be innovative and would work would be to create a structure that could engage the other sources of capital in a way that they would find attractive to them. So that would be very much a job for whoever leads it and communicates it, that this entity can crowd in your money to this end.
Just to add to that very quickly, I scored quite high on innovation, and I really like the fact that you put blended finance. I think that is innovative, and I think that could be the future for this. Where I scored quite low is on feasibility and scalability, because I couldn't see all the different stakeholders. So it is so highly regulated when it comes to bonds, so you would have to have banks backing that. I can't see how the regulators would allow it otherwise. It doesn't mean that it can't happen, but I didn't see that. Also, I'm missing the insurance part, because the insurance can actually put numbers on nature. So I think we need to have them part of it as well.
I was more heart and head, right? I think it is a moment for something like this for nature, and that we need that kind of bold thinking and that level of ambition in order to make the change we need. So that's where I with it.
Thank you very much.
At the
Excellent.
end of this, the audience get to vote on which Strictly Come Dancing
Yeah.
most closely aligned.
Right, judges' scores only for this one. Thank you very much, guys. I think that is. To cover all of that in 45 minutes is amazing. Well done. I also think bonus points for the kind of nature-based pictures growing out of the letters. So, Team Energy Transition, are you happy to take the next slot?
So we had a good discussion, came up with a number of ideas, a couple of which were very kind of ambitious and very global. So we decided to split the difference, go for one of those big ambitious ideas, and then perhaps one that's slightly lower hanging fruit and perhaps more achievable and feasible. So we've got two to present, but I'll hand over to Peter to do the first higher level, more complex one.
Yeah, I'm slightly worried about the judges' comments about feasibility here, but it seems like they're actually scoring it properly. So the first concept we came up with is, I suppose, the localized nature of energy generation and supply at the moment is clearly an issue around. Everybody thinks very much within their own borders. Clearly, as discussed yesterday, energy security is a key concept out there, but also that leads to challenges around, well, how do you actually create better systems thinking across the energy system at a larger scale? So we've tried to come up with the concept of what we're sort of calling regional energy hubs. Say someone said, do you mean Manchester? And I said, no, I mean Europe. So we're thinking large scale here around how do you bring energy distribution and coherence to large parts of the world, either by regional and geographical location, but also sort of, I suppose, where you've got a similar energy mix. So creating policy in Europe where you might have a high degree of renewable energy and a good regulatory framework is not going to be the same as creating energy policy in Indonesia, for example, where there's a completely different energy mix or at a different stage of where they are in their development of the energy transition. So we came up with the idea of trying to create maybe 10 regional hubs, so Europe, North America, Southeast Asia. So it's quite heavily regulatory driven. So this is all about how do you simplify approval processes, regulatory frameworks, energy mix. And so we came up with some of the key benefits that we thought around. Now, clearly, it's obviously resilience and security. So if you are creating large-scale energy transition at a regional level, that should bring about resilience and security for that region. I think one of the key challenges, obviously, one of the judges will bring out is clearly energy security also generally means country borders come into play, and politicians want to be able to control where their energy is coming from. So that is something that clearly needs to be overcome. So we basically thought about, well, who should be leading this? And we came with the IEA is a global neutral body. The oil companies might disagree with that. How do they come up with this concept of what the regional hubs look like, what regions they cover, what the energy mix should be, and what the policy? So some sort of top-level body to come up with those hubs, but then creating regional bodies to actually oversee it and develop individual policy. We think ultimately that will lower the level of risk and lower the cost of capital. So, at the moment, if you think about if you're issuing debt at a project or country level, you're have high dependency on the level of credit risk within that individual project or that country. If you can nationalize or start issuing debt at a hub level, you're ultimately drawing on a larger pool of capital. You're spreading risk across different projects, different regional geographies, and ultimately different stages of the development cycle, so from development through to operational assets. So a bit like blended finance, but it just comes naturally through issuing at a higher level than individual projects. And I suppose thinking then, what does that mean in terms of design? I think one of the problems highlighted yesterday was around the issue of people want projects now, but some projects might be 15 years out. So trying to get a concept of systems thinking, planning out what parts of the system need immediate capital. So you can go to investors and say, this is the next 5-year capital spending, 5 year. So you can actually start to plan out where capital's going, what stage of development it's going into, and ultimately line up investors to fund that over their project time horizon, rather than, clearly an issue with private finance is you commit today, but it doesn't draw for 5 years. So how do you come across that? And then I think the key bit is around, what ultimately do you need to sell to these hubs? It's ultimately job creation and communities. So how do you centralize generation, manufacturing around regional hubs? How do you pool skill sets, and then how do you create jobs off the back of that? So the problem that clearly certain industries have is it's very fragmented. It's very difficult to get the right skills in the right place. And ultimately that makes scaling up ideas very difficult. If you can create these more or larger pools of capital and centralize, for example, manufacturing skills, ultimately that creates centers of excellence, and you can start to divvy up, good old Adam Smith, who's got natural advantages in which areas, and then how do you actually pool capital and resources into those and increase efficiency of manufacturing. And then ultimately it should bring in more capital, but it also means relatively small amounts of public spending. So we're not talking about increasing or changing fiscal rules, increasing debt. It's relatively light in terms of public infrastructure requirements. You could argue some of these regional hubs need perhaps local planning within those hubs, but ultimately it's about harmonizing regulation, it's about bringing about stable regulatory environments, but it's not about putting in another billions of money to try and actually co-invest alongside private capital. That's idea one.
Great, thanks very much, very comprehensive. Idea two, much simpler, and I probably won't need to talk as long, or I hope I won't need to. We wanted to call it Attack the Grid, realised that might have security implications, so we put it on to Solve the Grid instead. But essentially, there's two arms to this, which is, in the first instance, I think we discussed yesterday the importance of building out grid infrastructure, but the fact that it is difficult for private capital, which is stacked up and waiting to deploy into these areas, it's difficult for private capital to access. So point one on that is loosening the regulation, a lobbying effort behind loosening the regulation that restricts private capital to essentially building out the grid infrastructure that we have already addressed and sort of agreed is required to support decarbonisation and the energy transition. And I think the point was made that their private capital is already accessing in limited pools the ability to build out grid infrastructure, and it's underpinned by existing revenue models that could just simply be expanded out to a broader array of grid infrastructure as well. So the models exist, and they're working. Revenue models such as availability-based payments. Richard touched on it yesterday, or the RAB model as well. These structures exist whereby people are still generating a decent return of investment into grid infrastructure, but we just need to see an expansion of that, because there is private capital waiting to do that, and that requires just a loosening of the regulation around it. I think as well, we just raised the point that, what works in the UK in terms of enabling access to investments into grid infra might not necessarily be the same. It might not look the same compared to different geographies. So how that capital works in different geographies just needs to be tailored to those individual geographies. And we use the ideas of completely non-centralized or decentralized microgrids or community grids. Those are different investment models that would work very differently to something like the UK's grid infra. So I think that was one. Loosen the regulation that enables more private capital towards flowing towards national grid. And then we also identified the fact that there is a massive bottleneck, and I think it's been discussed, around the grid, and that is largely underpinned by difficulties around planning, a lot of NIMBYism, where I think there's a lot of public objection, and the planning process essentially doesn't support a quick enough build out of grid infra assets. So to address that, and I think it was brought out through everything that Nicholas said yesterday in the opening keynote, was that actually energy security is more just a function of national security. So what we're pushing for is actually for energy and grid infra to be reclassified as an asset of national security, and it to be put at the put in a more central position with regards to national security more broadly. If you then achieve that reclassification, you can bypass a lot of the delays that come as a result of the time drag associated with planning and with land access as well. So essentially, the reclassification of grid as assets of national security would essentially enable. Sidestep is the wrong term, because that means that you're kind of bypassing, the planning laws that exist for a very good reason, but I think would enable you to speed up deployment of capital, which we've addressed over here, into grid assets, and therefore accelerate the energy transition. So I hope that kind of makes sense. And that was the end of idea number 2.
Thank you.
Shall I start this one? Okay. I'll take it in order of presentation. So in the regional energy hubs, the IEA already does quite a good job on the convening and the evidence base for decision making on, and the UN has already had a go at sustainable energy for all, quite a big effort to distribute renewable energy. They have IRENA as well, which is the Renewable Energy Association. Where does your idea fit with those existing initiatives?
So I'd probably say it's to a certain extent new. It's not a new concept, as you said. You're right. There's regional or local policy ideas. What we're trying to do is formalise them in an EU type block, but for energy, and make it global. Because I think that's a bit sort of, there's smaller pockets of regulation. So to my mind, this would be new above all of it. And we talked about the IEA sort of being the developers of the original hubs. I think then the difference is then you'd actually create regional blocks or regional committees to actually oversee and implement it and come up with a policy. So clearly there's an element of local knowledge that needs to be shared amongst those regional hubs. So it's not trying to centralise all decision making. It's ultimately trying to, I suppose, the IEA would, and we chose the IEA because we're trying to pick a non-political body, someone that would have a good understanding of what regional blocks would work, what energy mix would work, policy ideas. Then ultimately it would devolve the actual design of and implementation of that policy to local committees that oversaw each of the hubs. So each hub would look very different and may have different decision making depending on what works for each region. So it's sort of a 2 or 3 layer decision-making body rather than one body implementing and coming up with a policy.
I've got a very similar question. So maybe IEA is just an example. So how the OECD is structured, it usually goes through national contact points. So each nation actually can appoint who they see suitable. So is that maybe just an example?
Yeah,
each country could.
Exactly like the European Commission or something at a hub level. So you're right. Each individual country would maybe nominate someone to that local committee that ultimately knows its country, its strengths and weaknesses, the skill sets it has, and then it can actually come up with individual policy guidance for that area, but recognising that these hubs are also meant to trade with each other. So there's they are individual blocks, but within that block, freedom of movement is slightly easier, skill sharing slightly easier. So there's an element of then translating that into the political sphere as well.
For me, this is a kind of interesting hearts and minds conversation, right? Because I think there is as a citizen, I think there's a default that when somebody says, let's cut regulation, that is a way, right?
Harmonise.
Harmonise regulation, sorry. But I think there is, and I was reminded yesterday when Simon was talking about the pipe that's going from Morocco to Devon to kind of pump solar power in, and that's caused all kinds of chaos in Devon, partly because the conversation with the community and the conversation with the general public hasn't happened in a way that has got them comfortable with the idea before it is then put in front of them, I guess. So for me, that's going to be an interesting challenge. And
I think that's sort of, when we talk about systems thinking, independent judges coming in. It's also the concept of that feels very one way. They're being told that Morocco is going to do something for you, and I don't know the specific project. The whole point of this is that actually as a hub, everybody's told where they're going to be contributing. So you will get something from one part of that hub, and you'll be providing something else. So you're right, it's ultimately trying to get across that it's seen as a threat.
Yeah.
It's what are the benefits in terms of you have certain skills, they're not relevant to be building certain parts of this block, but actually what you do have is you can develop other parts of it, but you're right, it's that systems thinking, and it's making sure that everybody's aware of what they're contributing to the pot, and it's not being forced upon them, and ultimately seen as a jobs threats to the community and whatever.
Okay, we better get to number 2 since we've got little time. So again, it's a bit, I want to know what the intervention is here. I'm very happy with the objective and all the things that need to be done. Not so clear about what the entity is that does the intervention. Is it a single entity or is it a collaboration?
Good question. I think, well, if we let's take the UK, where perhaps the issue of planning is more keenly felt than other countries within the EU, for example. Yeah. But I dare say it's really a sort of a government-led thing. It's that ideally pushes towards.
It's a public agency. It's a public agency.
Where again, it's a sort of like I said, it's a reclassification at government level. Yeah. Where it's written into policy.
Which brings together various departments in order to solve a particular problem. Yeah.
Yeah.
Do we score?
Judge, any more questions? Or no? Okay. In that case, what I'm going to do is I'm going to ask Henry and Peter to come down here. Keep your microphones with you, please. Judge, is there any closing comments you'd like to add? Not scoring.
Are we giving them 1 or 2 scores?
Yeah. One hybrid one.
A hybrid one.
Yeah.
Is 1 going to be too difficult?
No.
Let's go with 1 then. Okay. Is there any
Can we give some explanations why we've given a certain score?
Yeah, or just before you give your scores, hold your scores back. Any immediate reactions you'd like to share? Peter and Henry, where are you? I need the microphone. Okay, I was going to. If you grab the microphones, please. Yeah. Sorry. Yes.
Do you want to go first?
Yeah, you go.
I really, really like both of your ideas. I think that they're hugely important, and also to connect them. What springs to mind is the exact same journey, more or less, that the telecom sector has gone through. Also, when we talk in terms of cloud storage, it's hugely connected to national security. You wouldn't have any of the regulators approve cloud storage unless the servers were on the ground within their countries. In terms of the IEA, I think to think a bit wider, that each coordination would appoint whoever is needed. In terms of, and this again connected to telecom, which I used to work in years ago, in terms of the permits, I really like what you said, Henry, about the public engagement, but I think the key is to turn it into business opportunity. So if we look today, why solar permits, why it takes so long, is because people don't like the look of solar sites. Well, that was the same for telecom in terms of building, putting up masts and antennas. You need to show the business opportunity. What's the alternative? You want to afford clean energy. So I would say that specify a bit more about the public engagement and how to make that into business opportunity. But thank you very much. Overall, very good.
Excellent. Thank you also. Right. Are we ready for our scores, judges? Mm-hmm. Okay. Let's go James or Dan. So James, 10, nice. Or 13, Dan? 10, excellent. There we go. How do we feel about that, guys?
Fine, yeah.
Thank you.
You happy? Peter, any reflections on the judges' comments there?
I think the middle seat's the best seat.
Excellent. Okay, right. Well, good effort there, guys, going for 2 ideas to try and pump up the score a bit. I thought that was, again, an excellent effort on another vastly complex topic. So we're going to come on to our third and final working group. I have to say, I feel like this group should benefit from a little bit of kudos for taking on possibly, arguably the hardest of the 3. Just to maybe has to, yeah. So we keep going, Chris. Yeah, it's a subject that requires a little bit of definition. So I will hand it over to Jen and Chris to talk about decarbonisation beyond power.
Thank you, Dan. We definitely had the hardest out of the 3, and I think some extra marks need to be considered from the judges in that respect. So we are looking at decarbonisation beyond power. So this is looking at sectors other than power generation, and it is a really important aspect actually when we take stock and look at this. There's around, I just pulled out some stats just to introduce this. So climate finance requires around $6 trillion annually between now and 2030 to deliver net zero. That's a huge amount. To date, that's been dominated by energy systems, 52%, and low carbon transport, 23%. Now, the telling stat is that needs to be flipped in order to deliver net zero. So, in terms of looking at sectors for decarbonisation, we decided to focus on transport for that very reason. So we came up with a very snazzy name, Decarbonisation Acceleration Fund, otherwise known as DAF. No T in there, thank you. And we picked a figure, $1 trillion, because we need to be thinking big. We need to be thinking about mobilising capital at scale by 2030. Now, these sectors need capital. Capital is not flowing into them at the scale we need it to. Why is that not happening? Because often it's seen as difficult, complex, technology-driven. And we were thinking about how do we mobilize capital into these sectors using a product, so thinking bigger picture. And we came up with the idea of using a fund structure and creating products within that. So essentially taking away some of the risk that investors may otherwise see. And if we take away that risk or box it up and provide it to other parties, then private capital can come in, fill the gap. So those products would be a combination of a first loss piece, so essentially taking that first loss risk piece, or providing an insurance product. And in that way, we can remove some of the risk that's perceived in these sectors, bring in private capital, and get this sector moving. Now, clearly, it needs to be driven on metrics. So, we are looking for this fund to be focused on things like impact, deliverability, viability. It's not here to provide a first loss piece on projects which are just not going to be viable, just going to lose money. That's not what we're proposing at all. So there's still some rigor around this fund. Where's the money going to come from is probably what you're thinking. Well, this really is a role for multilateral banks, wealth funds, infrastructure banks, policy institutions that need to get this sector moving, providing this financial product and mobilizing capital. Do you want to? Yeah, and we've got, so I think I've covered all of that on our summary slide. We're going to have a little bit more detail to explain it on this next slide.
So I think what we've done is not dissimilar to what FAN was. So again, looking at structuring, which we've seen done elsewhere to solve the problem of bringing people together. So I think the best example I've seen of it done is the US housing agencies. You want to get your first loss, your guarantee, your riskiest equity piece to be taken by, like you say, some kind of development bank, government, UK infrastructure bank. And you want those people to be directly taking, I think the structure is some kind of structured equity to developers, and you have enough developers to make it work, and you are taking some kind of upside in their companies and providing them much, much cheaper financing than they could have elsewhere. I think your telecoms example is great. We have an investment in a regional broadband business. There is no technology risk there, and I think similar in transport, there's not a lot of technology risk. It's a scale-up risk, and the risk is a cash flow risk, and you're creating your own cash flow risk. So the broadband business I'm talking about is recently took out a 20% interest loan from a really friendly US hedge fund to develop UK infrastructure. So if you have a way where these development banks can provide some kind of low interest loan but take some equity upside at the same time. So if you have your first loss, second loss equity being about 10%, then that means for every £1 you spend, you can spend £10 because you get the debt to take up the rest. So I think you have some kind of structure similar to the US housing agency. So first loss, we've already talked about what that would be. Your prefs or converts for your second equity, I think you have a really good market for that. I don't think you have any problem raising funding at that level. Again, your mezzanine or your second lien debt, the amount of money raised in credit funds for 10, 12% returns, it's not a problem spending that. So once you get away from taking away this pref first loss piece, I think your money's not a problem. And then once you get to the senior, you can surprisingly, you can manage to get AAA pieces on a single property. So the idea that you can't get a AAA piece on 100 different developers with different technology, different assets, you have the cash flows, seems mad to me. So I think you just have to get some kind of diversification so you can get your senior piece done. I also think the community engagement retail piece is really, really interesting because you have a huge missed opportunity to get people to want these things to happen. So, I was just looking at, the National Savings and Interest Department. I don't know about everyone else's mum and dad, but my mum and dad are very happy to get a £25 prize once a year from NS&I. So to provide some way for people to have some upside in these projects, whether it's at the EIS level, which is somewhere up here, the NS&I, which is somewhere here, or whether it's some kind of tax, energy bill rebate. I think you should be able to offer all of these levels to retail. I don't see why that doesn't work for retail the same way that it works for institutional. I think you can absolutely apply it to transport when you're talking about things like charging infrastructure, fleets of vehicles that are being leased. You've got your cash flows, you've got your assets, you've got a lot of security there. And again, I don't think the VC money is a problem. I don't think the AAA money is a problem. I think it's just putting them together and having these pieces. And I think that would solve a lot of your problems. And it's not innovative. It's been done very successfully, particularly in the US. So we just need to take that model and apply it here and be a bit braver on this first loss piece and be a bit braver in getting people both the upside and the security.
And that's the point. We're not looking to reinvent something here. It works in practice in other sectors, but we're just applying it to a sector that needs to decarbonize, that needs capital. It can have scale, it has feasibility, it has everything you should be scoring us on down there. So I think it's a fantastic idea. Ladies and gentlemen, DAF.
So judges, it's no DAF idea here.
Oh,
over to you for questions.
Nice.
It's a very good presentation, thank you. So can we go back to the structure? The insurance and pension money is obviously a very large source of capital. But they also can provide risk transfer products, and they very rarely do it in the same instrument. I'd be curious to know how you're going to persuade them to do that, because it would be very helpful, no doubt, to you if they could provide a risk transfer product at the same time as their own capital.
I mean, I think they absolutely can, and they already are. They're just mostly doing it in the US. So UK pension funds are buying risk transfer products at this level, just in the US, because in the UK we just don't have the same kind of structuring securitization around these things that you. We, as a UK pension fund, invest in risk transfer in renewables developers lenders in the US, but I think it already exists.
Good.
I think the whole sitting here in a remote and peripheral region of the UK, transport is a kind of incredibly controversial, and with housing, probably the two biggest issues around economic regeneration and growth within this county. So it's quite interesting how, you're delivering an intervention in London on a transport infrastructure project versus Cornwall, and how the fund will manage that kind of process.
I think it looks to me somewhat similar to the regional broadband story. You need to take a lot of learnings of things that have happened there. Yes, it's going to look slightly different. You're going to have different customers, and you're going to probably have to have different levels of subsidisation guarantee to get the infrastructure done. But there's no doubt it needs to happen. I just think you've got to provide the communities the upside in it. And I think it's only small nudges. Somebody said yesterday we're very herdable, and I completely agree with that. You only have to introduce a 5p plastic bag bin. There are no plastic bags anymore. So similarly, I think you can nudge people onto public transport or EVs by giving them upside in, whether it's in savings products or tax rebates. I think it can be done. You just have to provide communities some upside in it as well.
Yeah, I think there's a good role for government in here as well, because if you think about European money invested in Cornwall to get broadband to a level where it was at a higher level and more competitive than anywhere else, that's a kind of interesting play in here as well.
Is there anything else missing? I really like the idea, and as you're saying, it's working in the US. What else is missing for us to make it happen here in the UK and Europe?
I mean, I personally think community and retail buy-in is a huge thing to be addressed, and I think there needs to be more carrot in it. I mean, why does everyone pay the national lottery when you have no chance of winning, but you don't play VC?
Small denomination bonds.
People need to think they're going to win and have a bit of upside in it, and a bit of, the local versus global. I think, both are obviously really important, but it makes a big difference if you can see the thing that your money's been spent on.
But you generally still need in order to make that possible, you do need some kind of treasury guarantee or something. So in that area there, and that's where you'd put it. And that's where you get scale, because you need scale for something like this.
I mean, we've done it at the 1 to 9.
Yeah, because you don't get scale from the retail. You get participation, a sense of ownership. Yeah. Great.
Excellent, judges.
Really good.
Done with questions. So what I'm going to do, we're constantly evolving the format here. I'm going to ask Jen and Chris to come and join me down here with your microphones. I'll ask you a couple of questions on reflections. Judges, is there any high-level comments you'd like to give now, just while you think about your scores?
No, happy.
No,
Great
all happy. How do you feel that went, guys?
It's Claudia Winkleman now.
Yeah, we're really putting you guys on the spot, aren't we? Exactly. Just come up in an hour, or 45 minutes, in fact, with an entirely new way of financing decarbonisation beyond power. How do you try and kind of filter it down a bit there to something more manageable, Chris?
Well, it was tricky. Lots of great ideas around the table, and I think we just realised that let's pick a sector that really does need financing applied to it. Hence the stats which I started off with, and a bit of good thought around the table, and we came up with a great idea. So
absolutely, yeah. Jen, I got the sense you were enjoying the kind of slicing and dicing the risk profile. Do you want to set up your own investment bank? Possibly, is this kind of where we're going with this?
You fund it, yeah.
Yeah, well, I don't know. You could pitch it, put it out there. Excellent. Well, I thought it was a fantastic effort, guys. Thank you very much. And Another round of applause. And I hear that the scores are in for the judges. So James, please. 14. Whoa! There we go. Orsa, 14. Whoa! Down 13. Hey! Excellent. Well done. So, right, we've got a slight surprise for you guys. Sorry. Yep.
Great presentation. Very helpful to have a structure that you could see working. And I felt like it ticked all of the requirements of our judging criteria. And it's something that if I was in a position to provide substantial amounts of capital, I'd really like to do that.
There we go. Excellent. Dan, also any other comments?
No, I'm just relieved, right? Because about half an hour into that session, you had nothing written down. And I was like, this is going to be a nightmare. But yeah, it's great. Thank you.
Yeah, I feel that if you guys had gone first, it may have been slightly different, that presentation, mightn't it? But you did very well. So I think we're just cranking the supercomputer to tot up the scores. Chloe, is that right? And just while we do that, so we were going to record an episode of the world famous Frontier podcast, but we haven't got time for that. So what we're going to do is just instead of that, and sorry guys, you don't know this yet, if it's all right with you, we're going to ask you to stay up for another sort of 15 minutes or so, and then Chris and I are going to come up and we're just going to draw some kind of reflections together on the whole last 24 hours, and then for all of our avid listeners, for Laura and Juliet, who are going to be our guests on the podcast episode, we're going to then reflect on it and record the podcast episode in the next couple of days, basically. So it will go out there in terms of kind of general reflections on the day. Do we have the score? Here we go. Very exciting. Excellent. Thank you, Chloe. So, wow, here we go. So we have, first of all, some fantastic news for the energy transition team that you achieved a podium finish, so well done. Excellent. With a score of 33. And some great ideas there about creating regional hubs and putting the grid as a national security kind of issue. So I think you really were getting to the kind of core of the big picture of what we need to do in the energy transition. No small feat. Team Nature, even better news for you guys, a silver medal, so well done with a score of 35. That was brilliant, really great presentation, lots of thought about how you start to solve that conundrum of allocating, how do you sort of put a price and risk on nature and things like that and allocating it to the right people. So that was excellent. And then, big drum roll please, which leaves our winners as the Decarbonisation Beyond Power team with a score of 41, so fantastic, well done guys.